Right now, Bitcoin is doing something extremely dangerous for retail traders. It's giving them hope, just enough to buy in, and then pulling the floor out. We just watched price rally from 65,000 all the way to 69. Retail bought that move aggressively. And then, right at the level we had marked in advance, it got rejected hard. We're sitting right back at 67,800. This is not random. This is institutional mechanics at work. And if you don't understand the system running behind this price action, you're going to keep getting chopped to pieces in this environment. Today I'm going to show you everything the IVT dashboard is reading right now in real time. Now, not what I think will happen, what the institutional data is actually telling us. We'll cover why the macro regime is still full risk off despite that 69K rally, what the hidden absorption at the lows actually meant, and exactly what needs to happen for the next high conviction directional move. Stay to the end because I'm gonna show you the live wind tracker build directly into version 13, total transparency. You'll see exactly how these signals have performed. Let's get into the data. Before we analyze the market, let me walk you through the instrument we use to read it, the IVT dashboard 13. It's not a collection of indicators layered on top of each other. It is a unified analytical framework, a single panel that runs thousands of calculations and distills them into a scannable decision matrix. We read it top to bottom down. Every row is telling you something specific. The very top rows are your institutional awareness panel. We have the bias. It is bullish. But don't let that fool you. Bias reads the short-term local price structure. It tells you the immediate swing direction. After that move from 65K to local structure has flipped bullish. But local bias is not macro regime. These are two different things. Then we have the VWAP deviation. The price is trading slightly above the anchored VWAP, the institutional cost basis. This is the dividing line between buy the dip regimes and sell the rally regimes. Above AVAP, institution buy weakness. Below AVAP, they sell strength. And 1.3% above means we are barely above that line. Then we have the confluence score. This is the number that matters most for trade sizing. A score of 4 means the dashboard is telling you the evidence of a sustained directional move is almost non-existent. Even with a bullish bias, this is a no man's land reading. Do not size up on 4 out of 10. Okay? So signal tire, it's blank. No active high tire signal. The system has not detected sufficient institutional conviction to fire an S3 or an S4. We are in observation mode. We had an S2, which could be seen as a counter trend move, but nothing more than that. Now we move into the structural integrity panel. The swing edge is 285 bars. This is a mature bearish swing. Mature swings require significantly more evidence to reverse than fresh ones. This sell-off has been running for an extended period. The clock matters. The swing type, confirmed bias swing classification. Despite the local bullish bias, the structural swing remains bearish. This is the difference between a counter trend bounce and a regime reversal. Stability, it is 0 out of 2, one of the most important readings on the dashboard. This measures whether volume structure is consolidating into an institutional base. 0 means no evidence of institutional accumulation at current price levels. Institutions are not building positions here. Then we have VP recalculations. The volume profile has not restructured. The point of control is 67,882 has not shifted. That level remains the institutional equilibrium anchor. Convergence status. Our multi-AVAP system tracks 3 separate volume-weighted anchors. When they cluster, we get institutional consensus. Right now, they are diverged. No consensus price level has formed. And this is where the macro intelligence lives. we have the VP delta. Volume pressure at the point of control is balanced. Neither buyers nor sellers are dominating at 67,882. The market is genuinely undecided here. And then we have the volume compression. It has expanded by 33%. It's not coiled. The volatility from the recent move has not compressed. Coil setups, the ones that precede explosive directional moves, show compression readings above 70 to 80%, and we are not there yet. The Cantillon flow, full risk off. The macro regime engine. This is the most important reading for understanding the institutional flow cycle. All three layers are red. I'll spend a full section explaining exactly what this means. The composite score, it is 0. We are not building a bull case yet. The VIX layer. Market fear is neither spiking nor collapsing. Neutral VIX in a risk-off regime signals complacency risk, not safety. Then we have transition, which shows stable. The regime is not changing direction. It's holding, but stable in a risk-off regime. It's not a reason to buy. Most retail traders, they operate on what I call price-first thinking. They see a candle pattern, they see a support level, and they take the trade. They completely ignore the macro current running underneath the market. The Cantillon effect, first identified by economist Richard Cantillon 3 centuries ago, describes how new money flows through an economic system and who benefits first versus last. We built this framework directly into the IVT to map where institutional liquidity is flowing in real time. The flow sequence works like this. New liquidity enters through central bank's policy. Bond market responds first. This is the liquidity layer. When bonds conditions improve, capital rotates into equities. That's the second layer. When the equities stabilize and expand, risk appetite extends into Bitcoin and crypto assets. That's the risk layer. Right now we have liquidity and equity off, and we only have the risk on. This means we have not cleared even the first gate of the Cantillon sequence. Capital is not flowing into bonds, which means it cannot flow into equities, which means Bitcoin cannot receive institutional allocations from the macro cycle. The macro bonus is -1. That is one penalty on every long signal that fires. Every buy signal generated by local mechanics is being discounted by the macro filter because upstream conditions do not support it. When you understand this framework, that 69,000 rejection makes complete sense. Price rallied into institutional supply. The macro regime applied a penalty. Sellers who have been in control for 284 bars used that liquidity to distribute. Retail buyers got trapped. The IVT isn't just a technical indicator, it's a regime filter. And the regime filter is saying risk off with a -1 macro penalty. That context changes everything about how you interpret local price action. Let me show you the most interesting thing that happened over the past 2 weeks and why it matters for what comes next. As price bleeds down from 70,000 to 64,000, every retail indicator was generating sell signals. RSI oversold, momentum negative, social media sentiment collapsing, the narrative Bitcoin is going to 60,000. But look at the IVT was detecting underneath that price action. It detected strong deviation. It's cumulative volume delta divergence. This is a fingerprint of institutional absorption. CVD divergence fired when price is making lower lows, but the actual buy volume, the limit orders being filled at these levels, they are increasing. In plain terms, price go down, but institutional money flowing in goes up. This is the oldest signal in institutional market structure. When institutions want to accumulate at scale, they need retail panic to create the supply that they absorb. They let price fall. They let sentiment deteriorate. They let the narrative turn bearish. Then quietly, they fill their bids. We saw multiple consecutive strong diversion signal fires at the low. not one, multiple, across multiple 4-hour bars. This is not noise, this is systematic absorption. The terminal then fired a delta S2 signal at the recent low, a tier 2 signal. The 6 notion means this configuration has appeared 6 times in the look-back window. Historical precedent confirmed. The S2 generated the counter-trend long setup that drove price from 64.5 to 69,000. A 6.9 move in approximately 48 hours in a full risk-off macro environment. So this is the critical lesson. A counter-trend signal in a risk-off regime is not a regime change. It is a defined, time-limited bounce that will face institutional supply at resistance. That supply was at 69,000. The terminal had it marked, price reached it, got rejected, and returned to 67,800. You don't need to predict direction, you need to read the structure. And here is the most important thing I can tell you about what comes next. The current setup is not yet a coiled spring. For a coiled spring, the type of setup that precedes high velocity directional move, we need 2 things to align simultaneously. Convergence status, active. AVAPs clustering at a consensus level. Volume compression, coiled, above 70 to 80 compression reading. Right now, convergence is at 0 point diverged. Volume compression is at 34% expanded. We are less than halfway to either condition. What this tells us, we are in the middle of a transition after a significant move, before the next setup. This is the chop zone. This is where impatient traders who missed the last move start making up for it by overtrading. And that's exactly how they get ground down. Patience is the edge here. Here's what a high conviction setup looks like on the dashboard. Convergence status flips active, the AVAPs cluster. Volume compression goes into what we call coiled range. That means above 70%. The Cantillon flow shows improvement in at least one layer, or a macro catalyst shift the VIX layer. When those 3 things align, you are looking at potential powder keg. That's when S3 and S4 signals fires. That's when position sizing can increase. None of those conditions exist today, but understanding why they look like this means you recognize them when they form. Let me give you a precise tactical map for the week ahead. Here you see the institutional reference levels identified by volume and AVAP analysis. These are not predictions. The framework is simple. Above 69,000 with macro improvement means bullish thesis is building. Below AVAP at 67,200, bearish thesis reasserts. Between those levels means chop. No edge, stay flat. Regime first, volume second, price last. You don't take a trade because price touched a level. You take a trade when the terminal confirms the regime supports it. I want to talk about something almost nobody in the space does honestly, showing you the actual performance data. The IVT dashboard has a built-in signal performance. It's a tracker that runs automatically. It logs every high tire signal, S3 and S4. It tracks whether it hit target 1, target 2, or stop loss. All of it is on screen, visible to anyone watching. The current 500 bar look back shows 14 wins and 1 open across 5 high tire signals. That's a 100% win with an average of 1.9. I want to be clear about what this means and what it doesn't mean. Past performance is not a guarantee of future results. The win rate will evolve as market conditions change. But the tracker doesn't lie. It logs every signal, win or loss, in real time. You can audit yourself. You can verify it. There is no cherry picking, no curated highlights, just the data. That is the standard this work is built on. So it doesn't tell you the P&L. It just shows you how this framework would perform under the current regime. So everything you've seen today, the Cantillon macro filtering, the CVD divergence detection, and the multi-AVAP convergence system, the tired signal architecture, and the automated win rate tracker, all of it is in the IVT terminal. I built this because I was tired of all the retail tools that were out there. I've been trading for more than 20 years, and I have distilled all of my trading experience into this indicator. The IVT terminal gives you the same institutional reference points that actually move markets. We have volume profiles, AVAP positioning, delta analysis, macro regime scoring, integrated into a single scannable dashboard. If you want to stop trading against the current and start reading the market the way institutional money reads it, the link is in the description and pinned in the comments. 2 things before you go. First, if this breakdown was useful, hit the like button. It only takes 2 seconds. It helps this content to reach traders who needs it. Second, drop your biggest question about the setup in the comments. I read every single one of them. The best questions become future video topics. The 67,800 equilibrium won't hold forever. The next high conviction move is coming. The terminal will confirm it when it does. Regime first, volume second, price last. See you in the next update. Trade safe. Bye bye.